Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes confusing language of corporate filings. Today we're diving into a report from LightPath Technologies, and trust me, it's more interesting than it sounds. This isn't just about numbers, it's about a company making big moves and the potential ups and downs that come with those moves. Think of it as corporate speed dating with money and stocks involved. We are looking at their 8K form, which is basically a quick update a company gives to investors about major events. This one is dated February 18th, 2025. It's like a corporate news flash, letting everyone know what's happening right now. LightPath Technologies made a big purchase. They bought a company called G5 Infrared. Buying another company is like a business marriage. One company swallows another to become bigger. To pay for this purchase, LightPath sold some of its own stock to investors. It's like selling pieces of your company to raise money. They sold something called preferred stock, which is a special type of stock, and also warrants, which give the buyer the right to purchase stock later. They also sold regular common stock to another investor, the Light & Canberra Foundation, in what they are calling the common offering. So basically, they are getting money from various sources to complete their purchase of G5 Infrared. The company says that the deal buying G5 Infrared closed on February 18, 2025. It's like saying we signed the papers, it's official. They also completed the stock sales to investors right before that deal. They found a small mistake in the original purchase agreement. It was a typo, a minor error that needed fixing. This kind of thing happens all the time in these complex deals. Because they sold stock, they have to promise the investors that they will register the stock with the government, with the SEC. Registering the stock allows the investors to freely sell the stock later. If they don't register on time, they have to pay the investors some penalties. LightPath is telling everyone that the deal to buy G5 Infrared is completed. It's official. G5 Infrared is now part of LightPath Technologies. They had previously talked about this deal, but now they are saying it's done. If you want to get all of the details, you can see the previous report they released on February 13th, 2025. Because they raised money by selling stock and notes, the company now has some financial obligations to those investors. A financial obligation is something the company owes, like money. The sale of stock to investors wasn't registered with the Securities and Exchange Commission, the SEC, ahead of time. However, they used certain exceptions to get around registering at the time they sold the shares. They will have to register the shares later. Selling the preferred stock changes the rights of existing stockholders. This is because the preferred stock can be converted into regular stock, diluting the value of existing shares. A new person, Thomas Ellis, was added to LightPath's board of directors. Think of it as hiring a new player for your company's team, someone to help make the big decisions. They had to create a new type of stock, the Series G convertible preferred stock. To do this, they filed a certificate of designations, which is basically the legal paperwork that defines this new stock and its special features. The company put out a press release announcing the deal and stock sales. This is like the company shouting from the rooftops, hey, look what we did. A press release is their way of telling the public what's going on. The company includes a disclaimer saying that they can't guarantee future results. They are basically saying things might change, don't blame us if it doesn't go as planned. It's a way to protect themselves from lawsuits if the future doesn't match their expectations. LightPath says it will provide the financial details, the real numbers about G5 Infrared later. They have up to 71 days to release this information. They will also release information that shows what the company will look like financially after buying G5 Infrared. This gives investors a better idea of the combined company's potential. The report was signed by the Chief Financial Officer, Albert Miranda, which is the person in charge of the company's money matters. So let's break this down into plain English. LightPath Technologies just made a big move by buying another company, G5 Infrared. To pay for this, they sold stock to investors. This is a common way for companies to grow, but it also comes with risks. On the plus side, buying G5 Infrared could bring new technology, new customers, and new opportunities for LightPath. That's the hope anyway. It's like adding a star player to your team. You expect them to make you better. However, there are also risks. LightPath now has more debt and obligations to its new investors. Integrating Ju5 infrared into LightPath could be difficult, and there's no guarantee that the combined company will be successful. It's like a marriage, sometimes it works out great, and sometimes it doesn't. Also, they mention potential liquidated damages payable to the holders of the registrable securities. From a financial point of view, we need to see those future financial statements to really understand the value of Ju5 infrared and how well it will integrate into LightPath. We need to see the numbers before we can make a judgment, but for now, let's assume the company estimates are correct. Based on available information, LightPath Technologies, in my opinion, stock is fairly valued right now. It's reasonable to expect a price range of around $2 to $3 per share in the short term. For LightPath Technologies, it is something to watch. It has potential, but like with all investments, be careful and do your own research. If you want to stay up to date on these kinds of corporate events, hit that subscribe button. Thanks for watching.